Good afternoon and a warm welcome to our Analyst and Investor Day, our annual event. I'm very happy to see all of you. I'm very honored to have you here. I hope you will enjoy the day. I think we have put together some very good presentations for you, and it's a great opportunity for me, together with the senior executives of the company, to present our plans. The theme of today is value creation. How we plan to create value for our shareholders going forward. A lot of the things we're going to talk about is going to be forward-looking. But if you allow me, before we do that, let me take one step back first and look at what we said on our last Analyst and Investor Day, November 2011. We said that we are committed to a mid-single-digit growth of revenues, mid-single-digit growth of EBITDA, that we will reduce our CapEx spending to 15% of revenues, and as a result of that, that net debt to EBITDA will reach a level below 2, and all this by the end of 2014. I think if you look on the right-hand side, we have delivered on our promises. An organic revenue growth of 6% so far in 2012, an EBITDA growth of 8% by the third quarter 2012. We have started our descent to 15% CapEx to revenues, 19% last 12 months, and also a deleveraging improvement from 2.6 to 2.4. And in the middle of all this, we paid our dividend commitment. And I'm pleased in general with the progress that we have made the last 12 months and that we have kept our promise. We have also seen a good growth in our subscriber base, 7% growth, because we're still operating in an underpenetrated market. Our customer base now is 212 million. The group improved EBITDA quarter on quarter during 2012 and reached 44% EBITDA margin in the third quarter of this year. All the 5 business units are performing well. To start with Russia, overachievement on our operational excellence program that we announced, strong cost control, strong growth in mobile data, reaching an EBITDA margin of 43.2% in the third quarter of 2012. The best margin in a long time. We have a much better position in Russia today than we had 12 months ago. Improved operational performance, improved market position, improved financials. In Italy, good performance, difficult market, but we are growing our mobile revenue market share. By the end of the third quarter, about 20%. Management is showing good cost control in Italy, and the most important thing is basically that we are outperforming competitors quarter after quarter. We're pleased also with the performance in Italy, having an EBITDA margin in that difficult market still above 40%. Asia, Africa, strong performance in Pakistan, strong performance in Bangladesh, strong performance in Algeria. EBITDA margin approaching 47% for the whole business unit, and a clear profile where EBITDA is growing faster than our top line. Ukraine has probably been the most difficult market this year, or in 2012. We have now done a successful migration to bundles. So 75% now of the customer base is on bundles. We have been able to keep the EBITDA margin above 50% during the year, and we think we have turned the corner now in Ukraine, and you will have a good presentation on Ukraine outlining what we believe the future will bring there. And the fifth and last business unit, CIS, double-digit organic growth, impressive revenue growth, impressive EBITDA growth. In addition to the strong operational and financial performance, I think also 2012 has shown progress on M&A, on governance, and on the partnership initiatives that we announced earlier. We have exited Vietnam. We are in the process of acquiring control of the business in Canada with OTH, and negotiations with the Algerian government has shown progress, not with the speed of light during 2012, but we are still in process, and we are still optimistic to reach a conclusion in Algeria beneficial for shareholders. On the governance side, we have now a fully functional HQ in Amsterdam with 130 people. I've done 3 senior recruitments since last time we spoke. Jan Edvard Tygesen has joined us as Chief Operating Officer, Deputy CEO. Jan Edvard has many, many years with Telenor. I know him for years back. He's one of the people in the global telecom universe that I respect most, and he's adding a lot of value on the operational side. We have recruited Anton Kudryshov as our new CEO in Russia. Anton has had an excellent first year with good performance in Russia, explained earlier, and we did an internal recruitment of Maximo Ibarra, appointed him CEO of Wind Italy. Maximo has been instrumental in developing the business we have in Italy, leading the consumer business earlier, and now given the responsibility to head the whole company. So I see also the senior management team much stronger today than what it was only 15 months back. Shareholder dispute is resolved. The fast claim is withdrawn. Altimo has expressed that they're going to convert their preferred shares to common shares, so another uncertainty is off the table. And just before Christmas, we elected a new board of directors in VimpelCom. We still have 9 directors, and we have still 2 independent directors. And as we also said, we would like to partner with the OTTs, and the famous brands that you see on the slide behind me is giving us enhanced customer experience. It's giving us ability to innovate. It's giving us basically more customer loyalty, and we're also very pleased with the ability to work with this famous company. So in summary, I think we have walked the talk since we spoke in November 2011 on the financial area, on the operational area, M&A, governance, and partnership. Okay, so now let's shift gear and talk about the future. So what is going on in our environment? It's clearly changing. That being said, for me, it's easier now to understand what the next years will bring than it was 2-3 years back. I think we have more answers and less questions. Yes, there is a global economic recession, clearly, and I'm not going to comment on that. There are multiple people, experts on this, probably in the audience and elsewhere. What is clear to us is that the telecom sector is less vulnerable to the overall economical recession that we see. I think the services that we're providing are covering such basic needs that it's almost as you can group them now with bread and butter in terms of needs. And for that reason, we see less sensitivity on demand in a very difficult global recession period. I think that's a general good news for the industry. The OTT players are challenging voice and messages. That trend is there. Whether you like it or not, it's there. So let's relate to it instead of asking ourselves whether it's going to continue, what kind of effects it's going to have. It's there, and we need to accept it. Regulation is clearly having effect on business. I've spent a lot of time the last year meeting different regulators in our different markets, and I see and hear a little bit different tone now than a couple of years ago. I think also regulators, to a large extent now, want to regulate for incentivizing investments in infrastructure and not so much one-sided focus on regulation for increased competition. And we see also very different sentiment and mindset in different markets we're operating in. So risk related to regulation is clearly there, is still there, but I would say, and I hope, that this risk is lower now than what we saw a couple of years back. The movement from voice to data is obvious. Nothing to discuss, it's there, let's relate to it. Monetization of mobile data, biggest challenge for the whole industry. We're going to talk about how VimpelCom plan to address that problem later today. Basically, we think moving to bundles to protect voice and SMS, and to a large extent, pricing speed of access to the internet, and also pricing capacity in accessing the internet are probably the future price plans for the industry. If the industry can follow that path, we think that the whole industry will be able to monetize on a tremendous growth that we will see in the mobile data in the coming years. And of course, the last trend is the requirement of capacity investments in a very appealing situation where the traffic is growing probably 15 to 20 times over the next 5 years in the networks. So against this, we believe that the best position to put yourself in, the winners, tomorrow winners, are the operators with the right cost base and the operators with the best CapEx and most effective CapEx programs. And that's why today we're not announcing any radical news. There is not a shift in our strategy. We haven't invented a genius way of re-engineering the value chain. We're basically saying that our value proposal is built on the value agenda that we announced 12 months ago. And it starts in the yellow circle in the middle. Our value proposal to our shareholders is to focus on increased cash flows. There are 4 building blocks of how to increase cash flows. You see them centering the circle. Profitable growth is going to be all about getting your price models right on data. Operational excellence is going to be a hard execution program for keeping your cost under control. Customer excellence is going to be a lot about dealer commission and also their price excellence. And the 4th building block, capital efficiency. How do we increase network sharing? How do we optimize our capital structure? This is our value proposal basically to shareholders, and I'll return to putting some numbers on what we believe is possible to do over the next 3 years. But before I do that, let me also remind you about our business model. Because I think our business model is built for the reality that I just described, and it's different from many of the big telcos that you see in today's world. We have a fundamental belief in a decentralized business model. We have 66,000 employees on the lowest layer. We have 212 million customers that we interact with every day. We need empowered people. We need strong CEOs that can develop and maintain 10 very, very famous brands that you can see on the lower side. We have 130 people sitting in Amsterdam. 130 people out of 66,000. We don't want a big, expensive headquarters. We don't want a big bureaucracy where people on this level is going to fight with people on this level with matrix and bureaucracy and decisions that will take weeks and months before they can be executed. Here we have brainy, experienced senior people that can interact with local management effectively and be part of making the right decisions. We focus mainly developing synergies from roaming, from procurement, and Henk will explain an in-house banking concept that we're launching. Those are the synergy areas. Aside from that, we focus on performance management, we focus on portfolio management, we focus on people management. That's the role of the headquarters. And then we try to wrap everything in a VimpelCom way of working. What is recognizing a VimpelCom leader? What is the role models that we are highlighting, and what are the heroes inside our company? Our heroes are the passionate, professional leaders. Passionate, we have a desire to win. Professional, we set always customer first, and we have a deep understanding of what the operational excellence programs is all about. And on leadership, it's all about empowering people, and it's about execution. That's the model, that's the culture, that's the company we're trying to create without spending, again, a lot of money on unnecessary layers and bureaucracy. I said I'll go back to the numbers. So basically now there are two big baskets where we can generate cash in the next 3 years. The first basket is operational improvements. If we look at EBITDA minus CapEx in 2012, and we compare that to EBITDA minus CapEx in 2015, we think we can have an annualized improvement in cash generation of $2 billion. $1.5 billion is going to come from profitable growth initiatives that the management team will talk about later today, operational excellence initiatives, and customer excellence initiatives. Here, Anton in Russia knows exactly how much of the 1.5 he's going to help to generate. Maximo knows it, Ahmed knows it, Dimitri knows it, Igor knows it. We also know how much is going to come from data, how much is going to come from distribution concepts, etc., etc. So here, there is a very detailed matrix, plan, and project how that $1.5 billion is going to be generated. The remaining $500 million is going to come from CapEx efficiency. Same there, country and initiatives. We also have a balance sheet in VimpelCom and a history in VimpelCom that has an upside in terms of creating also improved cash flows from financing activities. Henk van Dalen, our CFO, is going to end the session today before the Q&A. He's going to walk you through this much more in detail. But basically what we believe is that by establishing an in-house bank, by optimizing the debt, by reducing the gross debt, we're sitting on a lot of cash right now, and by a corporate restructuring, making it possible with a more tax-efficient structure, this all could add up to as much as $900 million of annualized savings. Again, if we look at interest and tax in 2012, we implement a lot of initiatives related to those 4 building blocks. Let's look at what interest and tax is going to cost us in 2015. Cash improvement of $900 million in a 3-year period. In addition to all this, we also think, and that's quite obvious, I think, that if we are able to deleverage and if we are doing all these things, of course, also the average cost of new debt and refinancing is going to reach lower levels, and that comes on top of the 900 I spoke about. So we feel good about our own situation. We think we have been able to move the company in a position where we can start talking about these numbers. And for that reason, we also confirmed today the same level of ambitions that you saw in November 2011. Objectives, mid-single-digit CAGRs on revenues, mid-single-digit CAGR on EBITDA, CapEx to revenues, we commit to the 15%, and net debt to EBITDA less than 2. These are levels at the end of 15. The 2 ladder, the CapEx to revenues and the net debt to EBITDA, we talked about end of 2014 a year ago. The reason why we believe it's the best thing now to delay this with a year is basically that we will launch a catch-up program in Russia in 2013 that will also melt a little bit into 2014 and really once and for all close the perception of quality of the network. We have the right team in place, we have the right people in place, and we feel very good about spending now money on making sure that our network in Russia is having the same quality perception as the other two big players. And of course, we also hope that Algeria will be resolved, and for that reason that we can invest and put money into Algeria this year. And with those two catch-up programs, we think it's the right thing to delay now CapEx to revenues to 15 by the end of 15. But I think these are long investment cycles, and we believe more in the direction than in the accurate date where you reach these levels. And again, we commit to the dividend guideline that we have announced earlier to pay at least $80 per common share, assuming the 1.628 million shares we currently have. So this really ends my intro this morning. We think the whole world is going mobile. We think LTE will be an enabler and a game changer for mobile broadband. We have spectrum both in Italy and Russia. We think smartphones will completely take out computers, PCs. We think small screens will take out large screens. And we think traffic in the mobile networks will grow rapidly. So we believe we have an excellent position for take advantage of all this, and for that reason, in our strategy, when we talk internally, we make it very clear we're a mobile company. And we will allocate our resources and our investments to mobile capacity and coverage. And we will limit our investments in any fixed networks we have. The value creation model for shareholders is increased cash flows. 2 billion is the potential from operational improvements. 900 million is the potential from financial improvements. This adds up to a potential improvement of $2.9 billion 3 years from now. And all this needs execution. All this needs the right people. All this needs a passionate performance culture. I feel very good about the team I have around me. I feel very good about the country teams we have in all our markets now. I've traveled a lot the last 12 months. I've met with employees. I've discussed with employees. We interact with my direct reports almost on a daily basis. I feel very good about the quality of the people. And I think, again, this is a people business. And I think we have the right people to deliver on the strategy. So I hope we will be able to quantify the numbers. I hope we will be able, during the course of the day, to explain how we're going to do it in Russia, how we're going to do it in Italy, how we're going to do it in Asia and Africa, and how we're going to do it in Ukraine. Again, thank you very much for paying attention this morning. Thank you very much.